the weekly 30-30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and also the ones that have had the best improvement in momentum just this week, what we call the Launchpad. Gary Glover has been through the list, pulled out his favourite charts to walk us through. Good morning, Gary. How are you?
Yeah, I'm good, Chris. Yeah.
Got a bit of movement on the market. The market's coming down. There's some pockets that are still rallying, as you mentioned before. There's a few areas like biotechs and energies that might be running. So what's caught your eye on the quarterly momentum?
Yeah, so I mean, yeah, you're right there. So biotechs have popped here. Energy's popped again. So obviously iron ore's had a bit of a pop. Even the coal stocks had a bit of a pop as well. So still plenty of sort of the lithium sort of, players sort of, rare earth sort of stuff. That's still sort of pretty active. So yeah, there's a bit happening in there actually, considering market's been pretty weak here really we've had a bit of a downward grind here for 7 weeks. Banking and retail is sort of getting hit pretty hard. So, but yeah, there's still plenty happening here. Sectors within sectors are still pretty hot. So, there's a couple of stocks that are pretty high momentum scores there too, Chris, on that quarterly there. Sort of like SLM at sort of 84, and then Reach at 61. They've all sort of popped and just run straight up. So there's really no sort of technical pattern to sort of jump on there. But I remember this WC8 here, this Wildcat Resources. It was in the list there a week or two ago, maybe the last 2 weeks. I think from memory, this might have been actually a Friday here or Thursday. Friday was this day here. At the time there, I thought, oh, okay, it's had a pretty sharp run. There was a bit of selling sort of come in here. So this is a good lesson here actually, is that we know it's okay to have that sort of 1 day of selling, but it's usually sort of, that first day of selling, it's what sort of follows that usually is important there. So we saw here with that WC8, it was pretty much the next day there was no selling follow through there, just a bit of an inside day. And then we popped here, so we had a pretty couple of good days here. So I had reached that one high again, a little bit of selling here, but no sort of follow through again as well. Had a bit of a bounce, a lot of volume, but now what's the last 3 or 4 days here, there's little 3 little down days here, no selling still coming in. So yeah, so it's just interesting here, sort of like it's sort of, we've seen some of these ones that are really got vertical and kept going on the list here for 3 or 4 weeks at a time here. The common denominator with all those stocks that have kept going is that when they've had that little pause or a little pullback, we've seen 1 day of selling, but we haven't seen that second or third sort of follow through there. If you do sort of see that second or third day of selling, then that's not a good sign here. But when we're seeing that really light selling there, from the second or third day onwards there, those are the ones that sort of going on with it. So
that's a good observation. And just as you were looking at that, I looked it up. Wildcat Resources entered the Launchpad 31 trading days ago, and then it got into the top 30 momentum 22 trading days ago. So it's been in there quite a while.
Yeah, it's amazing how long when they pop and sort of stay there. So the ones you want to look for there, Chris, is the ones that pop into the Launchpad on big volume. So if there's big volume, then that's when you sort of get commitment and follow through. And then, if you manage to sort of get, if you're seeing those on the Launchpad there, if you can get a safe entry in there, then you're just really about looking at the pullbacks and see what sort of volume comes in there. So I think VSR was another one too that was on the list. We saw a few pops in there, but again, look, there's a 1 day of selling there, and then the next 2 days are pretty light. Then we get a little bit of a pop there. We saw this, all that volume there. We had that down day. There's no selling on that down day, and then bang, we've gone straight back up again. So run there, some reasonable volume. There's that 1 day of selling there, not great. 1 day little selling there, and then we've gone 1, 2, 3, 4 days here on the side here. No selling comes in. So this is what we're looking for, sort of like this. It's a good lesson here, really. You can have that. If you're watching this, this is what's been going on for months now. Is that the stocks that are on this list here that have popped here? They've usually started with some big volume. We've had the little pullbacks there, but apart from that 1 day, the second or third day has been really, really light. and then they've gone on again. Light consolidation, pop again. Look, even there, like I think, all the got 2 days down here, no selling coming in. So the WA one, which was the one that's that's still, this is the one that's really kicked on here, had an amazing run here. We showed here all through these pullbacks there, just no selling come in. Even that was the first day down here. Next 2 days, still no selling coming in, and then you're popping up here. So it's a bit of a gap, bit exhaustive, this sort of style move here, but very light volume here so far again here. So look, maybe it's going to consolidate here, but still not seeing any aggressive selling there. So I never really like to sort of see that big island there. That's probably the first exhaustive sort of sign there, but if we just sort of respect selling volume there, haven't sort of seen too much weakness there. E&O was sort of one that we spoke about as well. We sort of had that little pullback in there, really light volume, has popped again, did have that 1 day sort of selling in there, had a decent pop again, but it just hasn't sort of gone on. But so far, there's no selling coming in here as well. Not too much sort of selling coming through. So they typically that means they often can go higher there when there's actually no sort of selling going through here. So I noticed number 9 on the list was sort of Archer there. So again, this volume tells you so much here. So this is popped here out of the range. Again, that 1 day selling, and then look, maybe that's a little high there, but just really dries up here. And look at that day there. It's almost like once you see the volume, the selling dry up, and then you sort of see the pop there. Even actually, if you look at some of the bigger stocks as well, it's a pretty choppy market. It's not it's market like a lot of the bigger stocks are taking their time to move around, Chris. And then you can look at the chart and they sort of look like they're going to run and pop out of the range, and that they'll have a good volume day. And the next day, the price action is horrible. But you're seeing this horrible, but with no volume. So it looks horrible, but the volume is almost inactive. So it's actually no sort of selling going through. And that's, and the next day they're probably back up again. So I think actually it's a really good market to be watching volume really closely and the commitment of the moves. So there's probably a few more on the on our sort of quarter launchpad there. So MIO was sort of interesting one. This is sort of it's a smaller stock here, but this is a reasonable size base in there. Got your little VCP in there, and then sort of did pop out. Probably a little small, but little VCP did sort of come on there. Interesting to sort of see how this finishes. Is got a bit of volume early here, but definitely one to sort of keep an eye on. MIO, I think MGV. Little VCP in here. I think this gold play under bid here, I guess, as well. So that's feeling a little bit of a movement in some of the gold stocks. I think Austral was sort of one that we looked at. Again, there's that sort of pop, big volume. Had another day up there, and then the thing pulled back here, and again you saw the volume really dry up in here. So kind of looking, there's a bit of a theme here, sort of like a lot of these sort of stocks that are showing relative strength there, sort of popping out of the range, being the sort of stronger stocks there in the short term. They're all popping out big volume, and then they're retreating on that sort of light volume, and then they're going again. So it's sort of something we should be sort of watching for in this market here at the moment. So I think that's definitely something going on there. S&P was sort of one was pretty interesting here as well. This is a pretty strong trend here. It's a little bit
liquid.
Yeah, lightly traded, liquid there. But again, the last thing on the chart here is we've sort of run up here, and then the last 3 or 4 days here, there's
just no volume for that pullback.
There's still no selling here, so no one's jumping in here to try and get out of this thing here. So it's just interesting. Yeah, it's just you're seeing the same thing. A lot of the indexes as well. They're running up when they have their down days. You're not seeing any sort of aggressive selling coming in. So
this kind of echoes with your Tuesday report where you're talking about you're only expecting minor pullbacks for the overall indices.
Yeah.
History shows we should be higher.
Yeah. Well, I think the last sort of 60 years of the third year. So what I'm talking about there is 2013, 03, 93, 83, 73, 63. They often sort of follow like, in terms of your sort of 10-year cycle, your 0, 1, 2 years is sort of typically where your bearish phase comes in. So the end of the decade, your bearish phase starts. And then by the end of the sort of second year, which is usually October the second year or March the third year, that's usually sort of end of the bear phase, and then the bull market sort of starts again. So it usually sort of, particularly if you look at years that have come out of deep lows, so if you've actually had a pretty decent correction into that end of the second year or the start of the third year, then the market will often be climbing from that point forward. So from the mid sort of third year, all those years there, I think the drawdowns were less than 2 to 5%. I think the 5% was the biggest drawdown we had in those 60 years once. But most of them are sort of 2 or 3% drawdown. So it just tells you sort of like it's just typical sort of shareholder behavior, and that you have that big correction, everyone gets out, gets scared, and get all these issues around the world as to why everyone got out in the first place. And they sort of persist for the next few years, and recession, all sorts of negative news after you have these sort of 20 or 40% declines in the market. But then everyone's underinvested, everyone's playing catch up, and then as the market's rallying away, all your money managers, all your hedge fund managers, all the retail, everyone's underweight. So they're all. Anytime you get a decent pullback, you're all jumping back in again. So it just sort of stops the market from having drawdowns. So I'm definitely sort of seeing, even this report here, Chris, we're seeing, the bank stocks are, they're in a fairly decent down climb. They're in definitely a really strong bear trend. Retail stocks, some of those stocks have dropped like, AX1, which is a bit of a star here. It's gone from 260 down to 160 here in a month and a half here. It's a lot of retail stocks have actually done that here. So, it's just interesting here that you're still getting sectors here in the market that are running hot here. So there's plenty of stocks that are going up hot, even though while other stocks are coming in. So this is definitely been the case for the last few years. We've got to be in the right sector. So that's why it's important to be sort of looking at stronger sectors, stronger sort of stocks there. And as you and I sort of I've been talking about this, and I know it's something you've mentioned a few times. It's been ringing in my ears for the last couple of months. Is that not just the high type flag, but a lot of technical patterns. If you're trading the leading sectors, your chances of being profitable are double what they are if you're trading in a non-leading sector. So if you see a stock you like and it looks pretty good on the chart, but the sectors, there's a laggard there, or the sector's underperforming, or the sector's being negative, that's, you'd be better off basically just following the strongest sectors and stick with the strongest momentum here. So I've been listening to sort of a couple of Christian Kalamagi interviews the last couple of days, and he trades the top 2% of the market, relative strength only. So
in the 30. In the 30-30 list, he'd be cutting that list in half and only trading the top half.
Yeah, so he's just trading the strongest stocks there, only looking for the little congestion, the little pause, or little pullback. Where it's, he looks at the 10 and the 20-day moving average. He might like, if it's a really, really strong stock, and it's like, comes back to the 10-day moving average like that, then he'll get into it again. And if it's a medium sort of mover there, maybe like the 20-day moving average, you'll come back and see that, come back to the 20, and then he'll trade that. So, but he is just looking at the top 2% by relative strength in the market there. So, it's a pretty powerful lesson in that. So, pretty interesting. that's the last of the quarterly momentum there. Looking through, looking at what stocks have sort of popped there. So we're sort of seeing that, AVH is sort of big move there in the biotech space there. Sort of Rhythm, RHY has had a decent move. Even things like, I saw Polynovo as well had a bit of a pop there and kind of retreat as well. But just a lot of stocks in that sector running there. MIO was number 4. It's had a bit of a pop here. Just a couple of stocks that I did sort of a bit further down your list there was actually New Hope. I quite like to look at this here. This is sort of like, because really this is like a sort of sideways sort of correction here, Chris. Used up a lot of time. It's just come back and retested the low here. And the last thing on the chart here is actually a pretty decent rally here. Pretty solid volume out of here. So this is pretty constructive there. If you look at the bigger picture there, the New Hope there as well, this is sort of a, it's a big sort of consolidation here, overlapping in nature as well. So come below the 50, but I don't know, it's just interesting here, the volume sort of coming in here, just seeing quite a few of those energy stocks sort of pop here. So definitely some, Whitehaven Coal's had a probably slightly bigger correction there, but again, it's sort of some decent volume has sort of come in here, these stocks here. So looking at the daily there, big chunk of volume there too. That's probably, got to go back to the sort of the previous year there, see that type of volume come in. So some good signs there. So that's sort of telling me to keep an eye on that. We saw like uranium has moved quite a bit there. So I think on the list there, I think Paladin was on the list. Paladin basically, this is an opportunity missed here really for me. Sort of stock some false sort of break. False break on the chart here, but obviously that was sort of regarding some, government regulation, maybe looking at government, looking at change a few things from it. As someone sort of pointed out on Ausbiz the other day, everywhere around the world, there's some governments trying to change regulations for the mining companies to get more royalties and more money. So it's often talked about. So it's probably just an opportunity here, but that's had a pretty good recovery there. I think Deep Yellow was on the list as well on there. I'm sure that was on there. And that's been pretty firm as well. So that uranium, they hit the launch pad there a few weeks ago. So they're still pretty buoyant there. So thought they're pretty interesting. A couple of stocks that sort of unusual on there was SSM, a sort of service stream. So so had some decent volume there. Look, I guess the only thing there is that maybe this might be sort of coinciding with a lot of businesses, calling staff back into the office there. I don't know, maybe it's just going to be good for a service stream here. I don't know. It's you've seen CBA and NAB sort of come out and say we want staff back in the office. So you might sort of start seeing a lot more firms head that way. I know Elon Musk's a big fan of everyone working in the office, so there'll be so it's just interesting sort of what might go on there. So that's definitely one to keep an eye on there, because it's sort of broken the downtrend here, broken out of the range here. It's sort of this would sort of be our range here. So this would be like Davis would be this would be breaking out, although it's not breaking 52-week high, definitely breaking out of the range there. So that's pretty positive. This one surprised me, Sezzle, SZL. So sort of congested here, had a bit of a pop, a bit of congestion again, just starting to break through, up through little highs there. The volume's still pretty light here, but almost got the sort of somewhat appearance of a VCP sort of starting there, Chris. A little too early. Not probably seeing enough volume in here so far, but still sort of constructive here. So I don't know if I get my money, just because I'm not big fan of that sector, but the chart doesn't look too bad to me. So
I was going to be surprised if you didn't caveat that with saying it's not your favorite.
I just sort of, it's a bit of headwind there, but that's probably not, that one actually doesn't have too big a, it's not like sort of some of the other, stocks that have sort of, that have got, years of sort of downward pain and massive, sort of downside there. I think it's got, I think it'll have a bit of, it's, won't have too much sort of headway in front of it, which is probably gives it half a chance there. Number 20 was CMB. I thought that was okay. Talked about the coal stocks there. GRX was sort of, thought this is interesting there. A little bit of maybe a little cup and handle in there, or just, yeah, just nice and tight in here. Just sort of had a pretty strong trend here, sort of a bit of a pullback. Volume sort of come in at the low, which was interesting, and then had a nice recovery. Stayed nice and tight here. It's obviously not very liquid, but yeah. So that's what's that green X metal. So that's sort of in the space that is a little bit warm. So but yeah, the chart's actually pretty constructive there. C6C, which is another copper mountain, which is another interesting one there. So this has sort of been trending up. It's a little bit overlapping here. I do like the fact that a bit of volume sort of came in here. So this has sort of had a bit of a pullback and the volumes come in. I do like this, Chris, here, but my disclaimer here is that this is a corrective trend here so far. So it's rallied up to this point here, sort of come back, gone to a new high, and it's overlapped. So it hasn't sat on top of the previous high. Okay, so it's overlapped the trend. So that's a corrective trend. It's not an impulsive trend, it's a corrective. So it's not the strongest trend here. It's gone to a new high again as well here. Has it come back and sat on top of the previous high? Now it's gone slightly lower. So that's a bit of a negative for me. So just not, if this was sort of sitting on top of this trend here and it dried up here and that volume sort of came in on top of that trend there, big, I know it's only a small difference there, but it means a world of difference to me personally from trading point of view, because sort of oftentimes these corrective trends, they start as corrective, and one of two things happen. They break out, come back and sit on top of the high, like I guess like S&P 500's done, and then on it goes, or it basically sort of fails there, and it will basically roll over, maybe come back and kiss the high, and then roll off here. But this is still an overlapping trend here, and not as strong here. So daily looks okay, but the weekly is just that's my sort of, it's only a sort of fine, it's only a small difference, but that small difference makes a world of difference from a trading point of view.
Well, I'll ask on behalf of the viewers 2 points that maybe going through their mind is, could these classify as like Davis box breakouts? And could it also be a 0, 1, 2, 3 bottom? So how would you view those two aspects of this chart right here?
Yeah, it could do. I mean, this is a little VCP in here, so that's kind of constructive after you've seen you've got your little false break low in here, and then the whole thing's tighten up and then pop. Okay, so that's kind of constructive there. So if I look at my daily, that might be, in here. So this is your first pullback, second pullback, and then breaking your B wave there is probably a good sign in here. So that's good. And we just had a short-term move, and then we've had a pretty deep retracement as well. So it's gone through, but hasn't really gone on with it. So this is a thing that's actually pulling back deep into the range each time. So just, again, you really want to sort of see it, sit on top of here. So
could it be 0, 1, 2, 3, or what would stop you from applying that?
Yeah, it could be sort of, we've got a few sort of high lows building in here. It just at some point,
overlapping nature is the concern, right?
Yeah, that's right. Yeah, it sounds like a minor thing there, but it's a world of difference. If you go back and study trends, study the history of trends and stuff there, then you'll notice that that's just the more important thing, So what did I saw the quote there during the I was actually watching. Actually, one of the viewers sort of sent me a link for Larry Williams there, was sort of what he was looking at. But he had a Churchill quote there, which I thought was fantastic. It was the farther backwards you can look, the further forward you can see. And and that really epitomizes what we're trying to do here. And even looking at the cycles as well. Most people are sort of are reacting based on their emotions in the market, and we know that's not the way the market works. But if you sort of study the history of the market and how markets work, what the best setups are, then that's history is going to be the best guide of moving forward here. So I thought that was a sort of cracking quote there. The other good comment I sort of saw during the week there was which I sort of I had seen before somewhere. It was like when a stock's been basing. There's a couple of stocks I'm looking at the moment. Like I think there's one here, might be A11. So this has sort of had a bit of a pullback in here, and now we've sort of had a bit of a recovery. Still downtrending here, but the whole thing's now starting to tighten up in here. So maybe possible VCP. And there's another one there, sort of, I think ACE is a bit messy, but KOB was another one that I sort of saw. Again, this is really basing here. So, had good volume there, pull back, good volume, pull back, some good volume, pulling back here. So the whole thing is just in a big base here. So the longer the base, the higher in space is a well-known sort of trading there. So we sort of see that, really, really long sort of, I think we're sort of like with ABC there, it was sort of sitting in that tight range here for a long, long time here. So this is sort of like, the whole thing sort of based up here and then the whole thing pops there. So the longer you sort of see that sort of congestion sort of sitting there, just churning, and the stock just holds up here, and then that's when you get the pop here. So that's definitely sort of something to look for. If you sort of see those sort of, if you're looking at sort of some of the stocks that have been only around for a couple of years, if they sort of have a bit of a run and then they just sort of go sideways, congested for a long period of time, and the volume dries up and then price action dries up there, that's the sort of stuff you're sort of looking for. You're looking for that sort of, sort of move here. So, so there's a few stocks there sort of I'm watching here, just sort of looking for those long sort of congestion bases. But yeah, there's still plenty of trades around, Chris. Yeah, we've just got to, I was saying off air earlier that the penny sort of dropped for me a little bit in the last week here, just sort of, just was sort of sticking to the stronger stocks here. Like the odds are so much better. Like it's weird. There's so much noise out there. It's sort of so much. Don't mean to be harsh on people, but yeah, I'd say 75% of the people who are talking about the market every day on TV don't actually understand how the market actually works. It's not a rational sort of enterprise there. There's a reason why trend traders are successful, Chris, that they don't take a view. They just let the price action tell them to when to get long, and when it crosses over, they get out. And then the track record of these sort of trend traders can be sensational. They far exceed some of the money managers that exist there, and they don't take a personal view. They don't have a view. They just follow the price action there. And look, sure, they're going to have sort of sideways years, and maybe they'll get choppy years. But when the market moves and moves big, they always catch the big moves. So they let price action really dictate what they. Whereas if we let our emotions dictate, and this is like, no one, 3/4 of the investment world can't comprehend why the Nasdaq is going up. It hasn't comprehended this going up since October here. But that's exactly how markets work. So rather than trying to understand them and make sense of your sort of emotions there, just just follow the price action. Okay, so get away from all the noise, language. If anything, if you're somebody who listens to the financial press and the news, is that the stronger opinions, the more that actually collaborate with each other, the more likely that is to be wrong. And we're seeing here recently that was, once all the analysts get in agreement that that a certain sector or a certain stock or a certain company or whatever is
destined for one way or the other.
Don't go near that sector for whatever reason. So this is happening. So everyone gets out of that sector, has a massive correction. So at the moment, retail stocks have absolutely been hammered here. So it feels like we shouldn't go near retail stocks because they're like, interest rates are going up. Feeling the squeeze. A couple of them have said that sales are sort of softened, so we shouldn't go near them. But they've already halved, Chris. They've already, the reality is if you think about this, this sensibly, maybe retail stocks might have a 10-15% slowdown in sales, yet the share prices are already off 30, 40, 50%. So they're already priced it in already, and maybe some more. as the market always goes too far, either way. So we're already pricing in a 40, 50% correction in retail sales here. The reality is probably only going to be like a 10 or 15% cool off in normal numbers, but the market's already, goes overboard here. So the one thing I know is that that's the sector we should be looking at here, because in the last 18 months, when every analyst has agreed you should not be in that sector, that is usually coincided with very close to the low for every sector so far. So, it's hard to get your head around that. It makes no sense to be buying retail here, considering the economic climate and what's occurring. But the market's already priced it in. That's the thing you got to think about. It often gets sort of priced in here. So, so no one want to go near retail stocks. But the reality is, if you think about, if everyone who was going to sell them, have probably already sold them. And then all the negativity now, so probably you might see a little bit more selling here, maybe, the days to come here. But I'd imagine within the next few days, every analyst, every broking house is saying, get out of retail, get out of retail, get out of retail. Everyone's going to get out. So after the next few days, who'll be left to sell?
Only long-term holders and those who mopped it up at lower prices
are
holding the shares.
The
weekends have left.
Yeah. So sort of 90-95% of the people who were going to sell it will have had it done by now, or or very soon here. So that's why probably 95% of the price impacts are already taking place here. So it's going to go softer, it can go lower here. Maybe there'll be some downgrades as well. So that might put some pressure there. So probably don't be in a rush to go in there. But that's a sector we should be keeping an eye on here now, because it's been beaten up so badly. Everyone hates it. Everyone's trashing it. We want to see some price action to confirm that first, of course, and we just be buying, falling knife there. But this is the sort of stuff which, that type of activity tells us there. But that just typifies the market, the mechanics of the market. Okay. So when everyone's, the guarantee here, we'll look forward 12 months. We go back and look at the charts and we go, oh, everyone was, circle this point here. This is what everyone said, do not buy this sector. Like 6 months from now, it could be very different. And then look at all the sectors that everyone's saying you need to be long this sector right now. Which ones are going crazy? Got to be careful. So I know we're sort of got the 30-30s momentum there, but the one thing we do know is that momentum does continue to keep going. So that's the sort of disclaimer there, is that, as we know, the stocks that really do have the momentum, they push on a lot higher than everyone thinks. And the same with the downside, the ones that are negative will go a lot lower, everyone's think. But you are kind of looking for that moment where everyone's given up. And then maybe on the upside, you're looking for that moment where the stock is so hot. It's the hottest thing in town. We've just seen it with AI. So AI's run up for the last probably 6 to 8 weeks, had a fantastic run there, but it's gotten a fever pitch there probably last week, isn't it? So last week was probably, in terms of AI, so even maybe early this week, last week, just the fever on that sector. I think that sector's probably got more to run here, but the fever of it probably tells me that's probably short-term peak. It'll probably cool. Unfortunately, all the retail money flocks in there at the very, after it's already run 100, 200% where it is, and then they get caught out thinking, oh shit, I need to have Nvidia shares, need to have, but that'll probably cool off here. And then when everyone says, oh, that was a fad, that was a bubble, what a waste of time. You should have, sell that rubbish. That'll be time to go back in again. So just, got to use the charts as well that you guide you through, but just understand the emotions of the market is just really important, I think.
That's what you're saying is reminded me of two books. One, Stan Weinstein's that we've talked about a lot, Property in Bull and Bear Markets. And that book, I think, was written in the 70s, late 70s. And he's got, during those bull and bear periods that you're talking about, there's all consensus. Everybody's saying the market's going further down, or it's the best time to buy. It's going higher. He inserted headline clippings of newspapers at the time, and you can play that over again cycle after cycle, and exactly what you're saying. And in a similar sense, I think another one is George Soros's book, The Alchemy of Finance, written sort of late 80s, early 90s with the savings and loans crisis in the US. It's interesting, if you read that book with the same lens exiting the GFC. That book can almost word for word can be written about the same cycle, and it's history repeating itself. And but we should probably make a point that while you're talking about contrarian aspects and like the psychology of it, you're not a contrarian trader. You're a momentum trader, and you're volume price analysis, right? So it's just that's where you can identify when the market's too hot, too overcrowded, and where the opportunities can come. Is that kind of how you're looking at these?
Yeah, definitely. I mean, like, I think we're sort of. I mean, I'm sort of, the old dog learning some new tricks here. The last couple of years, I've sort of learned that these momentum stocks, they do push higher than you think. They can keep going. Just got to sort of keep following those. But I mean, I guess we're seeing. I guess the whole idea is to sort of like the launch pad of seeing those stocks hit there early, getting a big jump, big volume. Then you're looking for that little contraction, little pause, and then looking kind of where you're going. So you're looking for stocks that are showing strength, having a bit of a breather, and then go again. That's if I can epitomize that's exactly what the best traders on the planet do. Exactly that, Chris. There's the guys that are making the most amount of money. That's how they do it. I mean, there's other different ways of making money there, but they'll make it usually a lot slower. They can make good money, doing all sorts of stuff. But in terms of sort of like a widespread sort of successful, equities trader there, that's probably the easiest way to do it. And it obviously takes a bit of hard work and stuff to do that, but that's the sort of strategy there where you can really get something sort of meaningful. But I think I was saying to you earlier that I was going through my sort of 21, 22, and so many trades and so many small losses. Like I realized I was sort of quite streaky, so I can get like 5 or 6 losses in a row, but then I get like 3 or 4 winners in a row, and they're massive compared to the losses. And then you might have like 3 or 4 losers in a row. Then you might have like 5 or 6 winners in a row, and they're big. So it's sort of like quite streaky. I didn't think actually I was that streaky, but when I started to look at the numbers, small loss, and at the times I thought, oh, I didn't really trade that well. I was too tight. That stock ended up going up, and but it was still sort of small loss, just lots of small losses. But the gains, I looked at a cluster. It was about 4 trades I looked at, probably accounted for maybe 75% of my gains for the year. I was like, geez, that's just those 4. So kind of like it, to me, it just sort of hit home to me that, all those trades were high conviction too. Like I really liked all those trades. I really, looked at them in depth and stuff there. So when you sort of see that really good setup, that A grade setup, which you think high conviction there, you've got to take a bit more concentrated about it. You look at Buffett and Drunken Miller, all the best trades. They're not bloody diversifying in the 20, 30, 40 positions. They're the best sort of stuff they're looking at. They're concentrated. So you need some diversification, but you need definitely risk management is the key. If you're going to be concentrated, you need to have strong risk management in place. But to get those, you can't have, if you're using the ordinary method, you're going to have ordinary results. If you want to have super performance, you've got to if you want extraordinary profits, you've got to have an extraordinary sort of method as well. So it's got to be a little different from everyone else's. So, look, I've got to be careful what I'm saying about risk management and stuff there, and don't want to see anyone go and blow up here. But if you really want to be good at trading, you've got to do something a little bit different from what everyone else is doing. And what, a lot of the sort of the well-worn phrases of sort of being diversified and stuff there, that all just really sort of dulls your risk, keeps you from getting in trouble. That's okay if you want to be an investor long term. If you really if you want to be a good trader, I think you've got to sort of build in a position, scale in there, and from what I've seen, and really sort of it's those. There'll be a handful of trades each year which make up the big gains. It's when you sort of do catch that big move and get on it and trade it well and scale up and then get a meaningful win. Those are the big ones. So the key there is sometimes it can be frustrating sort of not having your account going anywhere. But as long as you're keeping your losses small, that's, and then you just got to sort of try and learn from that, whether you give yourself a bit more room or or you add to it after it starts moving in a direction there. But it's just, I guess the sort of methodology, I think, is, sometimes, what we're sort of told out there is maybe not the truth. If you're looking at the guys who really do make the big returns, they do it slightly different from everyone else.
They do take a different approach. And I know a lot of trend traders do say that when they look back at their year, just like you've said, there's a handful of trades that make up the majority of their profits. And sometimes if they just look out their top 4 or 5 trades, they'd only be break even for the year. So it can be just those handful of high conviction trades that do the majority of the year's returns.
Yeah, definitely.
That's probably some good insights to take into the weekend, some good breakdown of trading markets, psychology of markets, contrarian momentum, and risk management of trading. So to that point, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, guys. Hope I didn't go on too much.
Oh, it's a long weekend, so it's got plenty of time to sit, digest, reflect, pull out the trades, the trading portfolio, look through the trades, and have that sort of reflection that you've just shared with us. So we'll probably share on the right-hand side there Gary's Tuesday report, where he does go into detail on those cycles, and he's talking about going back into history. He definitely does that when he's putting together that report, looking at the cycles. Also, the trading strategies that he uses, some things like false breaks, springs, we've covered those in details. And then also on the left-hand side, Gary Glover's Twitter handle, if you'd like to follow him there.